That leads us to our talk of the tape. Whether summer is likely to bring a swoon or surge for stocks. Let's ask Dan Greenhaus, Solus Alternative Asset Management. He's here with me at Post 9. Welcome back.
Thank you, sir.
Closing out the month, and we're about to embark on the summer. What about that? Sell-off, swoon, or surge? What do you think?
Yeah, listen, I think there's a lot of technical reasons to think that maybe we're up against the 4,200 level is obviously what everybody speaks about the most, but we've had a pretty good rally here, and if attitudes about the next Fed rate hike in a couple of weeks start to change, you could make a case for a little bit of a sell-off back down to the lower end of the range. I don't think that would be particularly deleterious to the rally that seems to be happening now.
You think we're in a better place than we were months ago? I mean, you've been reasonably cautious, I think. The market looked better to you?
Yeah.
Or worse since we've had this rally, and we can get into the sort of top-heavy nature of the rally in a moment, but generally speaking, does the market look better to you?
Yeah, just as a refresher, like, we were pretty bearish. I was pretty bearish all the way in 22. Somewhere earlier this year, the technical stuff started to work in your favor, and I think that's largely continued. So I think right now, from a broad market standpoint, you should certainly feel better about the market. At the same time, the top heaviness can't be ignored. I mean, again, this has been we've been over this 100 times.
Is it a bad thing? I mean, people have said it 100 times or 1,000 times.
Well, you had our mutual friend Brian Belsky on today, who recently put out some work on this. I don't think history is clear.
He said it's not a bad thing.
Yeah, listen, history is not clear that this level of a narrow leadership automatically means lower prices going forward. What I think it does do is leave the market susceptible to downward moves if something should come along that would warrant such a move. And so again, like, you've got the 7 or 8, whatever, biggest stocks, they're up, call it 30%, median are up 30%. The rest of the market is down 2.2% or so this year. Mm-hmm. It's not strong in that respect.
What about the AI trade? What do you make of it? As you've sat here, you watch these stocks and what they've done. Does it make sense to you? Does it make you nervous about whether there's a bubble? How are you thinking about it? Because everybody is thinking about it.
Yeah, and listen, I do agree with the general consensus that this is going to be you should think about this, the royal you should think about this in terms of the move to the internet, to desktop, to cloud, and now to AI. It's going to reorient business up and down the spectrum. I think the one point I want to make, I'm excited to be here after this point continued to be made for the last month or so, is this idea that somehow part of the move, particularly in NVIDIA, but Avago and everybody else as well, owes to the under-owned nature of tech. And so the only reason, or a primary reason, that you would get such a dramatic move in some of these names is people are playing catch-up. And I checked because it sounded not correct to me. When you look at hedge fund holdings, the top names in order are Microsoft, Amazon, Meta, Google, Visa, Uber, Apple, and Netflix. And then just a few down that list is NVIDIA, Salesforce, Palo Alto, and PayPal.
Yeah, but
that doesn't sound to me like an under-owned set.
I know.